Well, hello everyone. My name is Eugene Alexeev, and I welcome you to our next episode, Value Investing Talks, where we speak about business, finance, and investing. And today, my guest is Robert Quinn, who is a fantastic guy. And today we will speak more about the power of communities in private equity and investing in general, and how they affect the private equity deals. Hi, Robert. Really nice to see you. How are you?
I'm doing well. It's good to see you again, Eugene, and I thank you for inviting me on to have and talk to you about this wonderful, topic and just kind of go from there.
Yeah,
Can you hear
fantastic.
me okay?
Yeah, that's fantastic. Um, First,
Perfect, perfect.
a couple of questions to your journey, as we usually ask the speakers of podcast, how you have come to the private equity, because we spoke some time ago and you have the great experience starting from the army, then just transferring your path to the investing in private equity. So what drives you to this exactly journey? Could you at least share some ideas and information here?
And that and I thank you for the question because my journey basically has started. I'm third or second generation and of the military serving in the United States military. My father was Air Force. I grew up overseas basically. My ex-wife and four out of my five children are either serving or have served. So we have come into that, that country, God first and then country kind of mentality. From there, I can pretty much say that it has been a journey because the most part, the travel or, for lack of a better term, the journey has really included, several ups and downs, which everybody experiences. So I say all that because, again, I have experienced homelessness before. And in all, I want to say that my journey, even though I have, degrees out the yin yang, I used to have a mentor that used to tell me, man, you got plenty of degrees, but you still poor as a church mouse, okay? But the thing was, I had knowledge, but I lacked the wisdom to actually apply it effectively. And that's through age that I have learned that now. Coming to understand purpose versus provision minded, purpose minded, I can pretty much see that in everything that we're doing now and everything that is happening now globally as well as in the United States, we can see that, the mindset for how to utilize, yeah, say for instance, your assets of any type, how it's utilized and how it's actually brought more people to understand you just can't live life. You have to have a purpose. And just saying, okay, just want to make, some money and stuff, that does not apply anymore in the sense that what we're going through. So to make my point is that in my journey, I have learned the purpose-minded person is the ones that usually successfully navigates this life better than those that are just provision-minded. So with that being said, my my legacy is important to me, but as you know, I am definitely a community-oriented person, which has basically led to how we came about, a couple of friends, we became partners in the business, and we always wanted to be focused more on community-oriented type impacts, and that's how we started to formulate our overall investment mentality, for lack of a better term. So when you speak about our company, Jade Point Capital Partners, DBA, now JPC Global, since the last time we spoke, I mentioned to you that we had to literally kind of rip everything apart in order to rebuild it so that it can be a scalable model. And that's what we had actually done. So we're about to rebrand and relaunch in that mindset of JPC Global
Yeah.
because we're acquiring our first big asset company, which we know that right now, just to say we're going to acquire it for, roughly less than 5 mil, but the thing in 5 years have the ability to be $100 million company. And I am not, that's not hyperbole. Okay. That is the real actual ability for it simply because, again, it goes back to provision minded, purpose minded. And the previous owner, and this is not a dig in any way, this is simply stating they were not thinking as big for lack of, they did not know what they actually had, but they're okay. They're saying, hey, we want to grow, be more of a growth partners. And that's how we're approaching it. Okay. So that's how we got, or how I basically got to where we are now. Like I said, I've been from the bottom, now I'm headed to the top. So I can relate to everybody along the spectrum.
Yeah, fantastic. I really understand that when you have not a lot of resources, you start from the bottom and you acquire this knowledge and skills. It is really valuable. You become more passionate about what you're doing and you become more proud of that and thankful for what you've got. And you mentioned that
Absolutely.
you are now building the private equity fund, which is called Jade Point Capital, and it is the community driven fund. And my question is connected to the communities itself. So, how would you describe the role of the communities which might played the role for you in building this type of fund? So, have you experienced this effect on yourself as well, rather than on the companies which you are dealing with?
Okay, so I'm going to answer that in two parts. One, generationally speaking, we see the community in the aspect, and I'm going to really relate it to how everything is happening in the US right now. Last time we spoke, I mentioned to you how Target is the
Yes.
canary in the coal mine, right? People right now, especially millennials and Gen Zs, are ticked off. Okay, there is a undercurrent that's happening in our country. And I've gone from a macro, started in the macroeconomics. That's what I've been really researching. I'm a history, you know, person as well. Love to go back in history and start reading and doing a lot of research in history. But I say that to get us in a framework of understanding macroeconomics down to the micro. The communities right now in the US are ticked off. Primarily, you're African American and Latinos. Okay. Now, because of the policies that are being generated and put in place right now, we have a disparity. And this is where we have to all, as just people in general, and investors that are looking for really real value, have to understand you have to keep all of this in mind. This is not something that you can just say, I'm just focused on real estate. No, you should really keep in mind the whole macro picture first, and then you're able to work down to micro. I say all that again because there's two communities, and I'm going to speak about the African American community of which I am part of. Right now, 2024 says $1.8 trillion in consumer spending is what the African American, that's the buying power that it has. But yet it owns less than 1 to 10% of what it spends. I remember sharing with you that back in the Greenwood, Oklahoma days where, Black Wall Street, $1 went through the community at least 19 to 100 times. It stayed in the community 19 and circulated 19 to 100 times. Now, today is one time. All right. That means in a macroeconomic scenario, we have not even touched the ability for us to retain wealth as a community, and that's about to change. Because just like the blackout against Target, the only thing that's really keeping that undercurrent from really coalescing right now is because they have no understanding or even an alternative that they've accepted yet. Does that make sense? They have not come up
Yeah.
with a plan on how to counteract and capture their own money. But it's happening. It's about to happen. So I say that again because when it does, when they finally, and we have what we believe is a solution, that's you're going to start to see just in that community a major turnaround. Okay. So when you see that major turnaround come, and I say this now for the broader picture of your millennials and your Latinos and your Gen Zs, they have I think his name is Mamdani in New York, which he has basically won the primary in New York for the Democrats for the mayor. And the thing that millennials and Gen Zs do not understand the difference between socialism and communism and capitalism. Because if they understood who Madani, he is saying that he is all about socialism, Bernie Sanders, all about socialism. That's not the answer for us. That is not the answer for anyone in the United States to understand. Socialism is not the answer. Okay. That's why would you, if you're having a problem with capitalism right now and how the government has basically gone completely haywire, why would you give them more power through socialism? So what's happening is now you're starting to see communities, not only in the UK, and say, for instance, there's one in Ohio that we've basically started. Community wealth capitalism is what's now being understood is the alternative. It just has not been presented the right way, and that's what we're here to do. So I say all of that again. My point is there's an undercurrent that is about to affect the overall macroeconomics on how the direction of money will start to flow. Okay? And when that happens, that's when you're going to start to see major cracks in Target, because then you're going to start to see a more effective use of how a blackout can go against a major company that's going to eventually affect other major companies when they start to realize that you have 50% of the US population that owns 2% of the wealth, 2.5%. You have 40% of the population that only has 10% or 20%, somewhere in there. And then you have the top 10% that owns 67% of the wealth. And the only thing that, your people, and this is throughout history, that's how you had the French Revolution, in Russia, when they come to that part and they start to understand, wait a minute, there's something else that we have to, this is not acceptable and we're not willing to do it, especially Americans, because, Americans are Americans. But the point is, when they have to put down a situation like that, they're simply stating that there's going to be basically a movement that's going to make that change. So to answer your question truly about what about the communities now are just waiting for that spark, that one, two movements or whatever that starts to really capture their dollars and start to recapture their power. And then you're going to start to see a major change, which is going to affect everybody's investing. It's not just going to be, well, I'm going to sit it out over here. No, they are literally going to be a Sun Tzu kind of situation. All right. They're going to literally say, no, we don't have to have a fighting war. And this goes right back to what Ray Dalio was saying. They're going to challenge that power. And that power is going to change because then they start to realize that they had the power all along. So that's what I'm saying. And this is what has basically crafted our policies as well as our strategies on how we will be doing more community investing and how to do it effectively for both parties. Everybody's going to win in it. So
Yeah, got
sorry
it.
about that, but I had to get
Got
to
it.
it.
No, so that's okay. I think it's really useful for our audience and listeners to just grasp the concept of that. So, from what I understood, the community-driven approach and the community wealth approach, as you described. So, basically, when the special communities or group of people preserve and have the wealth inside them and just exchange the money between the members of the community, right? And my question here is connected to types of the community, because what you've described is, from my point of view, and what I understood, is more offline communities, right? So basically people who are living in a specific areas, in a specific locations. And what about online communities, like in Reddit, or maybe in social networks, in maybe different websites like school or other resources? Are these the similar ones, or they have the different philosophy, or maybe the models of behavior? How does it work?
To answer, that's a great question because again, those type of communities are close knit and they are extremely effective. I mean, the GameStop situation, how all of that played a major role in how GameStop start, was
Yeah,
just
it was one of
literally
the
exactly. So
famous.
they're going to be extremely effective if they choose to join into a movement that coalesce. And there's so many, say for instance, they're just a bunch of just tornadoes in a sense, kind of, spinning up. But when they all start to coalesce, yeah, that becomes extremely effective and it's going to be powerful. So that's why I can say the powers that be right now really do not want, they may see it, and I don't think they want that to happen. So that's why they keep so much division and everything
Mhm.
else. And that's what you see this administration is based on, division, dividing, but I don't think they're going to be able to continue it because people are always, willing to do what's right in a sense and say, okay, you may have most of the wealth, but you don't have most of the people. Because once most of the people, and this is another thing I pay attention to is the consumer index. All right. Because you have no wealth if you have nothing to sell and nobody to buy. It's a very basic, simple, concept. So when you have people that are willing to become more self-sufficient, that's how Bitcoin became Bitcoin. They want to decentralize and take the power away. But then when you have to get people's mindset to understand that's the only way you're going to do it, and you have to do it together, well, then that's when, again, governments start to really have a problem. And they cannot, continue to do that. And I can tell you right now, the online communities, Reddit, and those other type of communities that have that kind of influence, they're going to just put the match, to the flame. I mean, to the fire. They're going to light the fire, and it's going to be a problem for most governments. Final example on that topic is that what's happening in Africa. You're seeing right now more African nations, more Central African nations coalescing around Ibrahim Traore, Captain Ibrahim Traore. Because again, they start to see that the colonial powers, ever since, the 1945 is basically when the American power peaked. But everybody's been losing the Western, your colonial, all of that has been losing influence and losing power as well as and now you're seeing China and India, specifically China, starting to rise in more influence and power. So now you're talking about, again, communities that are now shifting, powers that are shifting. And that's what Ray Dalio was talking about. Powers challenging the powers that be right now being challenged by up and coming power. The world order is changing. So again, my point is Reddit and those online communities are going to be the matches that basically sets everything on fire.
Got it. Got it. Yeah, from my point of view, it's also really interesting because I think in some cases online communities are more powerful because first they have like no borders, no kind of limits, because almost everyone can join the specific community unless you met the certain criteria. And second, the one person or one group of individuals can be the members of multiple communities. So basically, you can have the enormous amount of them. And in some cases, you mentioned like Bitcoin or any other cryptocurrencies or any other currencies at all or assets. It is the communities, these are the communities at some point as well. So basically, there is a specific group of people who understood that they will exchange their wealth between them in the certain currency, right? And this is when we spoke last time with one of your philosophy of your fund, right? So basically find and invest in those businesses who have presence in the communities or have been working with the communities. And my question here connected to more with your investment philosophy. So how would you understand that this or that specific business which you would like to acquire is or has the community which meets your criteria, or maybe what are the criteria of the community driven business from your point of view, from the investor's point of view?
Right. And that's a great question, because the main thing that for community investing to be successful, this is why we target investors, and we would like to, work with family offices, high net worth individuals, self-directed IRAs. You remember I was big on that. The money that's patient money that's willing to say, for instance, hey, you give me a good return, but make sure it's preserved. Our philosophy is to make sure that preservation is first, but still to make sure that we're able to grow. And our target number is, again, our internal rate of return will average anywhere from 12 to 18% annually. And then, anytime that we are launching our projects in these communities, anytime we go above 18%, that means we hit pay dirt. That means that we have found something that works, and then we have to see, is this something that we can modify and then also duplicate in other communities that we're working in. But specifically, the type of companies, and we have just recently included retail. The actual industries we are going to be focused on is transportation, retail, healthcare, and then also renewable energies. And it's always essential. These are essential elements and investments in companies that are necessary for any self-sustaining community to be able to operate. So retail, definitely in the, organic and also organic type market companies, something that would be along the lines of Whole Foods or something like that. And then you have companies that, say, for instance, Brooks Brothers. You do not see Brooks Brothers nationwide in the sense of big cities, or that they operate in small communities. All right. They're more, and you'll see them in Texas and other smaller communities like that. So those type of communities that will thrive off of those type of companies is what we invest in. And how do we make sure that, we have the ability to really be really effective in that? Because again, we are working with community centers. We're also making sure that the community centers say, hey, these are the needs that our community need, that are necessary. And those are the things that we, of our ownership or in our portfolio that we want to duplicate and bring into there. So when we do that, they're saying, well, how does the community really invest, benefit from it? Because our strategies are, again, how do we create more wealth for the community residents is by, say, for instance, we bring one of the companies in there and we're saying, okay, well, look, we'll go ahead and formulate here and we're going to sell it to the employees, an ESOP. And then at that point, we'll start, working out a management contract where we will manage it, but they own it. So we have that ability to create strategies that when we go into those communities, it's like, okay, we're not here to just take everything, because that's what private equity was all about. Once it got, into the slash and burn, we're here to plant and build. How do we continue to build this and bring that investment capital in there? Well, that means that, hey, we're not only just funding in this one business, but stop and think about all the other businesses that it will support it. We're able to then now be that one thing that, every community that we know about, you'll find there's three things basically in just about every community, and that's a McDonald's, bank, national bank, and then you'll have a liquor store. So I'm not downing anybody, but I'm saying how effective are those things in building wealth for that community? Because a bank is hands tied. It cannot keep reinvesting in something and say, okay, well, we'll hold your money, but we really can't invest in here because none of you all qualify for our loans or stuff like that. Well, that's where we fill in the gap, because we have strategies to make sure that we are able to not only invest in there, but we are managing our risk in it as well. So that's why I'm saying that the whole philosophy and everything that we're more purpose driven to plant and build, and then work with the community to make sure we meet their needs, but then also start to go long term and help them and our investors to all prosper, instead of just trying to hit, the newest or the latest trend in order to meet uh, our, for lack of a better term, just to make our profit. You know what I'm saying? We're not there
Yeah, I understood the
to
concept.
make a profit,
Yeah.
but we're not there to make a profit. We're there to truly profit from all of it, but we're all profiting. That's our mentality.
Yeah, that's a really interesting philosophy and strategy, I would say, because it's complete like win-win-win situation. Because, for example, I more focused right now in the acquiring IT companies and the businesses where you can implement IT to scale. And usually, with the analogy, when you acquire the business, of course, sometimes you might have the community, but usually it can be either customer base or the group of people who extremely love your company and they want to reorder constantly, right? But in your case, you create not only the customer base, but the help to the whole community to get more and earn more wealth. And the more you help them, the more they can share the money between each other, and the more they need you. So basically, you grow, and the business grows with the community, and the community grows with the business, and vice versa. So basically,
Right.
This is a really interesting strategy. And of course, I understand that probably you are looking for communities which are growing right now. So basically, they're increasing at a certain pace, right? And yeah, that's really great. Like ecological thing to invest,
There
I
you
would
go.
say.
That's it. We're creating our own ecosystem
Yes.
and then making sure that we're the watchmen on the walls. You know what I'm saying? Let's
Yeah,
all
yeah, got
make
it,
sure
got it.
everybody's benefit. Don't just try to come in here and, hey, we're going to get our piece. No, this is for everyone, because stop and think also about all of the things that are now being cut from the government. So just for instance, Nebraska, Louisiana, Alabama, all of them now, these red states, Florida, they deported all their workers. So they are going through they are trying to figure out how do we do, and when they're proposing, the government's proposal, oh, we'll just do a subsidy, that's a Band-Aid. Okay, you have a broken leg and you're trying to put a Band-Aid on a broken leg. I'm sorry, that, again, that's not long-term thinking. That's just something like, okay, what is your thoughts for doing this?
Yeah.
And what was the end game? So just like you're saying, we're coming in to plant and build. That's the whole thing. And then make sure we fill in the gaps. And that's what community centers are for, healthcare, to say, hey, we'll be able to cover, healthcare and work through the system and present
Mhm.
ourselves as gap fills, but then everybody's now being,
Yeah.
is taking on those things and that burden, and then we're not relying on the government.
Got it.
So
Got it.
it's not like that hasn't been done because it's being done in Ohio now. You know, there's plenty of other places, and they call it more community wealth building. And there is a difference from what we're bringing and then what they're actually doing. And what we're saying is that we're trying to do the steroid thing. We're trying to make it so where it's like, look, there's nothing keeping anybody. This is the wealthiest nation, in the world. But there's a responsibility that comes with wealth. And it's more about, like I said, changing the mindset. And who better but the millennials and Gen Zs who already have that kind of, doomsday kind of mentality. It's like, y'all didn't leave us anything, okay? But we're trying to show them that you have the power. Stop thinking that you don't have the power and
Yeah.
know that you
Yeah.
have the power, but you have to change your mindset. Just being an influencer is not, that's not going to cut it because that's more oriented towards yourself. And I'm not downing anything like that. I'm simply stating if you really want to see a change, then you have to participate. That's what this country was based on, your country, God, country, and community and stuff. Well, we have to go back to that. And that's how you truly build the strong, relationships with your community. Because I'm gonna just say it, when we look back in the 50s and 60s, aside from the racial thing, they had some really strong communities. But then you had the Walmarts and the big box and everybody coming in saying, okay, we got to undercut them. But we're swinging back towards community again. We went one way and it's reached it. And you've seen 67% of the wealth is being held by 10% of the it's about to change. It's going to change over these next two generations, and it's going to be a good thing. But we have to always remember the responsibility that comes with wealth. As it is written, is that with much is given, much is required. And that's
Yeah.
where we
Yeah.
have to move back to.
Yeah. Totally agree with that. And my question is connected also with the uh, investing in this type of the businesses. And we all understand when usually the funds working either with the banks, with the leverage, or with the investors. And in most cases, investors can ask, don't you think that this type of businesses might be at a higher price to acquire? Because it's like, I don't know whether it's the closest analogy, but from my point of view, it's the first analogy in my mind. It's like the infrastructural projects when the government like building something for the community and it builds it for the long term. And then you understand that, hey, this is the sustainable business and the community will grow with it. And don't you think that the prices for this type of businesses and this strategy are higher to acquire the business first? And can this impact on the final numbers for the investors as a return on investment when you acquire this money?
And Eugene, you touched on a very good subject. That's a very good question because the reason is, again, when they think that these businesses are going to be a higher multiple, I'm going to probably challenge that. The reason I'm saying that is because right now there's a lot more businesses. Remember, we are in that silver tsunami. There's a lot of people that have built some good businesses and now are ready to cash out because the kids aren't going to want it. And we're experiencing that in our own acquisition right now that we're acquiring. Their kids do not want it, even though they're working in it. And so there's like, okay, but the multiples of it is actually below its market value because remember, we're about to acquire it for a little of nothing. And in 5 years, we know that we can grow this through acquisition as well as organic growth into $100 million company. And they've only, they're right now about 8 million. That's what they're grossing. And when I'd ask, when we were in our meeting and stuff, and I was just having a question, I was saying, so where do you all see yourselves in 5 years? And they said, oh, we think we can get to 20. And I was like, they don't even see what they have. You understand what I'm saying? So to answer your question, there's a lot of, businesses are going to be willing to say, I just want to cash out right now. Specifically a lot because of the administration and everything that's going through America right now. And I'm only speaking of America. But they're just like, they're tired. They're tired. They want to cash out and and we got a really good deal. And we did. And we're saying, okay, well, we can do this. And we even allowed them to say, hey, you don't even have to stay longer than you want to, but you're welcome. But here's some equity. So, and we're big on equity in the sense only in that we want to make sure that everybody's taken care of. We have really good strategies from, convertible debt and everything and stuff like that, that make sure everybody's taken care of. But then we also think in legacy. Because I'm saying, hey, this is, X amount of percent that you can just literally put into a trust. And they own that, your legacy, because we're not changing the name of the company. The company has such a rich heritage and reputation. It's like, look, all we want to do is build on it. We will not change the name or anything, not even the story. The only thing that we're going to do is be a growth partner. And that's the kind of thing that you're going to be looking for, because there's going to be many of those opportunities that are going to come. So as an investor, if you're just an investor like yourself, you bought these companies, the AI companies, and you bought that. If you're just in that kind of mentality to say, hey, you know what? This is where we are. You probably got a good, great deals on yours because you built them up and sold them. I think that's where the market is, and it's going to be. Now, there's going to be some, that are definitely worth a higher multiple, but I don't believe that's going to be the majority of them, especially with all these sweeping changes and all. Now, I'm not going to say that we're not going to benefit from all these sweeping changes, because we are. Okay. I don't care if you like Trump or not or whatever. That's irrelevant now. It's completely irrelevant. Where are you going to come down, and how can you make sure that your investors and any of our investors, all of our investors, partners, and everyone else, like I said, we're about sharing the wealth. All right. And definitely making sure everybody's taken care of. But when it's all said and done, it's going to be something, and I hope I answered the question, because again, those multiples are going to probably come down only because some people are just really, and I'm just talking from experience on, the people, they're like, I'm not going to sit out and wait to get 10%, 10 times, when I know that if I can get this 4.5 to 5, I'm going to be all right. And that's that's what I believe is going to happen. And I think we see it right now, and we're, just in the start of it, the beginning of it. So,
Yeah. And you were speaking about the US. It's not only the US trend as well. So basically in Europe and South America and Middle East and Australia and China. Not China is less with that, but there are also opportunities. People just, in most cases, just want to retire from the business because they've been working in it like for 10, 20, 30 years, and they just want to retire and have a rest. And their kids not always don't want to do that, but they just want the other type of the job. For example, they don't want to do the retail or maybe plumber business, etc., because they have been watching TikTok and they want to be bloggers and have this cool AI driven
yes,
B2B SaaS companies to
yes,
sell to Meta or Google, etc. And it's
yes,
also okay. But there is definitely an opportunity there because a lot of people have to offer this business to the market. And
yes.
and I definitely agree with you that there is an opportunity here. And one of my final questions here, what would you recommend to those people who might be interested to learn more, maybe about your philosophy, about the communities, about the investing in the community businesses? Because I think it's kind of the new concept right now. So not many people are talking about that. And where to go, where to read, where to watch, what to watch here? What would you recommend?
Yeah. First of all, and again, I'm not a licensed financial advisor, attorney, or accountant. So I'm not giving anybody legal advice or even, professional advice. I'm simply sharing with people what we're doing, what our strategies are, what we see. Some of the places I started is Ray Dalio, okay? His podcast as well as his YouTube snippets and things like that. Because I am just like, I'm similar to him. I'm big on history and, researching history. So I'm very attuned to and sensitive to how it's always repeating itself. It goes in cycles. Richard Wolff is another one. He's an economist, also a professor. His YouTube channel, these are just YouTube channels that people can, kind of quickly jump on quick and try to get some understanding. Those are the current type of pay attention kind of situation, right? As I tell my team, it's like, look, make sure that we are aware of what's happening on the outside, but let's stay focused on what we're doing. Do not get distracted because there is a time limit, I believe, that we're in before we come to a point where there's going to be a financial crisis. We don't know how, we don't know when, but we're going to get prepared. That's the biggest thing. Okay. And it's happening. It's going to happen. I ain't even going to say, well, if it doesn't, no, it's happening because we're in that same cycle. Some of the signs that you can also look at is that family offices, private equity has had its worst capital raising quarter to date. Okay. They missed out on 35% of capital. That's close to $116 billion that they could not raise in this first quarter, which means people, primarily like your financial office, family offices and so forth, they see something coming. It's in the cycle of the 4 to 7 years. And this is just speaking of the United States, where we've always gone through almost a 4 to 7 year cycle of a correction. We're in that cycle right now, prepared. COVID was something that was global and nobody saw that coming really. But being prepared now is no excuse. So that means that you're seeing a market where you have so many people like, oh, the market's still going to. No, I'm going to just share with you right now. I would redistribute. And I was listening to Rene Jean when you were over, when you're talking to him and how he was saying that he doesn't invest in things that were, he doesn't invest in things he doesn't understand, which is good. I understand that. But then there's also that point where you have to look at the real money and see what they're doing. So keep in mind on family offices, what are they doing with their money? That would be my, kind of, I don't need to know everything, but they know a lot because that's how they preserve their wealth. So that would be the ones where I would start, and I don't, let me recap. Ray Dalio, Richard Wolff, and then family office periodicals. What are they doing with their money?
And by periodicals, you are meaning like special websites of these family offices, right?
Especially and it's just Google family offices.
Okay.
Just Google family offices and then start to go through there and start to see what they're doing. Because there's plenty of websites on there, and I have my team, one of my investor relations, director of investor relations. That's all I have them doing right now. It's just start looking at, which family offices and what they're doing and how they line up with us, because those are the ones that we're approaching. But those are the three things that I was, the three primary things that I would start as an investor that's, probably not totally in the market or whatever. See what they're doing. You can also, after next week, we will be relaunching our website and everything else, contacts and everything. So I'll make sure that you all have, you get that information and everything. Everybody can kind of reach out to us as well. So that way, again, we are not financial advisors. We're only sharing with you our strategies. And if you want to, participate with us, we are planning on, having a really good set of webinars that's going to be happening every month, that people can just come on there and say, hey, let me see what's happening and so forth. And let me get to know you guys. And that's what we're saying. Before you choose to kind of come with us or be a partner investor, learn what we are learning as well, so we can share it with you so you can understand how this works. And then you can start to really change your mindset again to purpose driven instead of provision driven. And you'll start to kind of get more knowledge, because knowledge is the key. If you don't know, then you don't even know what you don't know, and you won't get there either. So that would be, to answer your question, the best way to start approaching how do I get myself protected. As is written in Ecclesiastes 11:2, it's like, divide your money, divide everything into seventh and even an eighth. In other words, diversify and understand what diversify means. Ray Dalio really broke, and I had to learn this, and it was just kind of amazing how he broke it down. It's like, just because you have several different stocks, in several different industries, that does not mean you're diversified. And diversification means that, okay, you have that, metal, precious metal, you have the hard assets, you have, a multiple section of assets. And that if one goes down, you're not, taken down, because if the market goes down, oftentimes it takes all of your, stocks with it, shares, whatever. So understand what diversification really means, but then understand how it will apply and truly benefit you and your strategy. And then you have to come up with a strategy, and that's really the only way you're going to base that on is, why are you investing at all anyway? What is your purpose for investing? And if it's like to build legacy, well, then you really need to get, learn from your podcast, learn from other true, purpose-driven folks. Another person I like to also mention is Garrett Gunderson. Garrett Gunderson, has, he wrote the book about what would the Rockefeller do, or what would the billionaires do. Very strong understanding of how to use cash flow insurance. You know what I'm saying? Things that we don't understand or don't know, well, then we have the ability to go find out what it means, because it's just how a strategy is used and how it can be so effective on making sure you become financially independent.
Great words. We will leave the links in the description below, including your contacts. So if anyone from our listeners or viewers are interested in contacting you or learn more about these fantastic resources, they can go there.
Awesome.
I would also point out that in most cases, you can go on the analytical websites like Dataroma or any others like SEC websites and learn and watch information about the major funds like Ray Dalio fund, and look through his type of strategy or how he diversified, because it is completely open and you can see all his positions which were acquired in the specific dates. And I agree with you 100% that diversification, and a lot of people just say that, oh, this time is different. No, it's not. And yeah, we all know the cycles and we all try to learn from the history, but
Right.
the history repeats, and we just need to be prepared for
Yeah.
any type of the situation and any outcome in this case.
I totally
Thank you so
agree.
much for this brilliant conversation. It was really great to speak with you about the power of communities and this approach. Maybe any final words to our listeners and viewers about anything?
Well, I mean, honestly, just it's time to pay attention, just don't get distracted, but pay attention. And I agree that just learn. And I think that's about all I have for folks. It's like, pay attention to what's happening, but don't get afraid. Just learn on how do you protect yourself? How do you protect your investment and your financial well-being? And that would be the best thing, because we're going through some tumultuous times, especially in the United States. So just be prepared, just like you should. And I appreciate you having me, Eugene. It is a true pleasure to get to speak with you, my friend.
Thank you so much for your time and for being on this podcast. And to our listeners and audience, thank you for being with us, and hope you enjoyed this episode. We will link everything with the websites. And if you have any ideas or comments, please leave them down in the special sections, and see you next time.
Thank you.